2, 1.
Hello, my name is Ellen Lord, and I am the Donor Relations and Program Director at Arizona Foundation for Women. Thank you for joining us for today's Financial Independence Seminar, Tax Implications of Turning Your Side Hustle into a Business. Together with members of our Professional Advisors Committee, we bring you information from experts that can help you make critical financial decisions that affect you, your business, your family, and your community. At Arizona Foundation for Women, we work to advance the status of Arizona's women through research, advocacy, and philanthropy to ensure their safety, health, and economic independence. AFW's work in research, advocacy, and programming is needed now more than ever. If you have clients or friends who are interested in helping Arizona's women, please feel free to reach out to us. You can access our website by clicking on our logo at the top of the screen. As for navigating your desktop, here on On24, you can change the size of any of the boxes you see on your screen by clicking and dragging on the right-hand side of the boxes. If you have any questions during the program, please feel free to send them in through the Q&A box. This program will be recorded, and a link to view on demand will be sent to you via email tomorrow. And now, here's today's program. Thank you very much.
Hello, everyone. My name is Megan Metzger. I'm here as a professional advisor committee member, and I'm going to pass along the presentation to our presenters, and I will be helping out with the questions and answers of the program today.
Hi guys, welcome. My name is Shayne R.Neuwirth. I am a CPA. I own Shayne R.Neuwirth CPA, PLLC in Scottsdale, Arizona. I started my firm 10 years ago. It's women-owned and operated. We have 10 employees right now, and we're seeking to help women have financial independence, start their own business, file their own taxes. I'd like to introduce you to Joanna Yergler. She is the Director of Tax at our firm.
Hi, like Shayne said, I'm Joanna. I'm the Director of Tax here at Shayne R.Neuwirth CPA. In my spare time, I have started a nonprofit with my friends called Always Good Inc. We raise funds to donate to the Lewin Fund, which researches gynecological cancers. So we do a lot of work with that. But we're here today to talk to you about turning your side hustle into a business and the tax benefits of doing so. Okay, so with the pandemic, many people lost their jobs or were reduced hours, reduced income. This was a great opportunity for many to take their talents and what they're good at and turn it into their own little side business. You can take your passions and create whatever you want. So if you're really good at something, you might want to start thinking about starting your own business. It's a perfect time to be an innovator or to reinvent yourself. There are several ways you can do this.
Yeah, so we have a lot of clients actually. So we're in the middle of tax season right now. A lot of people were doing their tax return for 2020. Joanna is one of the first people who's going to review our tax return in our firm. And I'll let her talk about some of the clients and some of the businesses we've seen essentially pop up in 2020.
There's been a lot more DoorDash and Uber drivers than there used to be. A lot of people are selling things on eBay and Poshmark. There's some baking businesses that have popped up, digital creation, website design, that kind of thing. A lot of consulting businesses. A lot of people have started new businesses in the last year. And with this, the main question that I usually get is, from W-2 employees that don't have their own businesses, hey, I'm working from home now. Can I write off my home office?
And unfortunately, a lot of the answers that we have to provide to our clients is with the passing of the Tax Cuts and Jobs Act that was established in 2017 and effective for 2018, W-2 employees are no longer able to deduct work from home expenses or mileage expense. So that's why it's really important if you do have a side hustle or a business that you can take advantage of having a home office with the income to go against the income that you have from being self-employed. So independent contractors are considered small business owners, and they're able to deduct these work-related expenses. That includes paying for expenses that you already have. So possibly paying for a home office. So Joanna's going to talk a little bit more about how you can provide or how you can take the deduction for working from home against your income from being a sole proprietor.
Yep. So the way the home office deduction works is you take the percentage of your house that is solely used for business. Usually it's a spare bedroom. And you take that square footage, divide by the entire square footage of your whole house, and that is the percentage of your bills your household bills that you can take as a deduction. The other option for that is the safe harbor law. The safe harbor for home office with the IRS is $5 per square foot up to 300 square foot, making the highest deduction you can get using the safe harbor $1,500.
Right. So if you use the safe harbor, the most you can get as a deduction is $1,500. If you use all your actual expenses, you can go way beyond that $1,500. So that would include like your mortgage, your rent, utilities, HOA, insurance, even renter's insurance, cable, and internet. So these are expenses that you're already incurring and you weren't able to deduct if you were just a W-2 employee, but if you do have a small business, you are able to deduct those against your business income. So now we're going to talk a little bit about startup expenses. So let's say you start up a business or you're planning to start up a business and you incur expenses. The IRS lets you to deduct up to $5,000 in the first year, and this would be essentially before your doors open for business. If you spend money on legal fees, advertising, setting up your entity, buying software, accounting services, you can bundle all these costs together as one lump expense called startup expenses. Most you can take in year one is $5,000. Anything over that $5,000 gets essentially amortized. You get to take a chunk of it every year over the next 15 years. If your business closes or you change your mind on how you want to operate your business, you can take all those final expenses in the final year. And we had a client who actually did that the other day. So we're very familiar with, writing off those expenses if the business didn't kind of continue the way you wanted it to do.
So another great deduction for small business owners is mileage. So the mileage you use for business activities can be written off at the IRS's standard rate. This year is 57.5 cents per mile. It changes yearly. Last year was 58 cents. Next year is 56 cents. So it seems to be going on a downward trend. You'll need to figure out which miles were used for business and which were not. Usually the standard deduction does give you a higher deduction than taking actual expenses. So we tend to use that the most.
So a really great tip. So according to the IRS, they want you to keep a contemporaneous log of all your business miles. So that would include going from your home office, going to the bank, going to a post office, going to see your CPA, an attorney, meeting with clients, picking up supplies. All that would constitute business mileage. There are really great apps out there that let you keep track of your business miles. Mileage IQ, Mile Expense Log, Hurdle, Trip Log. Some of these are paid apps that you have to purchase. Others are not. So it's good to just check into your, what would work best for you. I know there's some where you swipe left or swipe right when you're in the car to show if it's personal or business. So definitely worthwhile to invest in a mileage tracking app to make sure you're optimizing your deductions as best as possible.
Another great option for small business owners to deduct is their health insurance. IRS has said that for itemizing expenses for the W-2 employee and people that don't have their own business, you have to have medical expenses in excess of 7.5% of your adjusted gross income. This means that if you have an AGI of $100,000, you'd have to have medical expenses above $7,500 before they even start to count as a deduction on your tax return. If you do own a small business, though, you can take your self-employed health insurance. up to the net profit of your business.
And this also, AGI, just to kind of step back a minute, AGI stands for adjusted gross income. Essentially, this is just all your income added together. So if you were making $100,000 total, if you were itemizing, you'd have to have over $7,500 of medical in order to even qualify. And this would even if you're getting healthcare through the exchange, like healthcare.gov, and you received a 1095A, even if it was getting subsidized, you can still claim the amount you were paying as health insurance as self-employed health insurance. So it's really good to know that self-employed business owners, people with a side hustle, can claim health insurance, while W-2 employees probably are not going to get that same benefit. So that's another plus that business owners have over just a W-2 employee. Another really huge benefit of having a small business is employing your children. So this is something you can definitely do. I call it a three-pronged benefit. We always want to make sure that the work and pay are reasonable for what the child is doing. If you have a newborn, it wouldn't make sense to pay them, a high $100,000 wage. You want to make sure the skill set matches the pay. So if you have like a 7-year-old child, they can come in and scan for you, shred documents, maybe do some data entry, do deliveries if you needed them to. So just want to make sure the skill and the pay equal each other. If you're a sole proprietor, an LLC, or even a partnership, if you pay your children, this is a really cool fact. Typically, if you're going to pay any employee, you would be subject to payroll taxes. Payroll taxes are Social Security tax and Medicare tax, and those are about 7.65% for you and 7.65% for the person you're paying. So everyone knows on their W-2, Social Security and Medicare taxes come out of the paycheck. If you pay your children, you don't have to worry about those taxes at all. You're not subject to pay those taxes. So you can essentially save 15.3% tax by paying your children and pushing the income onto them. So that's a really cool thing that parents can do by employing your children. So you're essentially transferring the income from you onto them. They probably have a lower tax rate than you. And they also get the standard deduction. A standard deduction for 2020 is $12,400. So if you paid them $12,400, you get the deduction. Their income is zero. You've essentially wiped out $12,000 income at your tax rate, pushed onto your kids at 0%. Really great way to save on taxes. Another really great way to save on taxes is setting up a retirement plan. As a self-employed person, you have 3 options for retirement plans. There's simple IRAs, SEP IRAs, and 401k. So those are 3 really great options. You can contribute to your 401k, and you can have your children contribute to the 401k. 401k provides the best benefit of those 3. You can do up to $19,500 as an employee contribution. So if you're going to pay your child $12,400 to get to the standard deduction plus the $19,500 for their 401k, you can pay them $31,900 tax-free income, non-taxable to them, non-taxable to you. Regardless of your tax bracket, they're going to be paying 0% tax on that. So a really great example we have here, if you your business had a profit of $50,000, so your revenue minus all your expenses wound up to be $50,000, and you paid your son or daughter $12,400, got them to the standard deduction. That's about $1,000 a month to pay. The tax before paying them would be about $10,000. After having your child, your tax goes down to about $7,300. So you are saving about 28% or $2,858 by employing your child. So really cool way to save on taxes. And I always tell clients, the more money you make, there's more potential for savings. I want to take this quick opportunity. I know Megan is fielding questions in the chat. If there are any, we know we're going through a lot of material. If there's anything anyone needs clarity on or wants to talk further, let us know before we kind of go on to the next subject. So I'll just wait a sec for Megan.
Hi guys, no questions have come in yet.
Okay, perfect. We will go on. Joanna's going to talk a little bit about what a lot of our clients do and setting up their business. So I'll let Joanna take the lead here.
So when setting up your business, to make it official, you should set up an LLC, a limited liability company, with the Arizona Corporation Commission. If you are a professional that's governed by a state board, such as a doctor, real estate agent, CPA, etc., you would be able to set up a PLLC, which is a professional limited liability company. You can do this very easily at their website, ecorp.azcc.gov. It's a very easy form to fill out. Arizona makes it extremely easy to have a business. They have a perpetual business, so you don't have to apply every year. You have to assign a statutory agent, which in Arizona, they do allow you to be your own statutory agent. So most of our clients are their own statutory agents. I'm actually from Illinois, and I know that in Illinois, you have to hire a statutory agent that has nothing to do with your company. So you'd have to hire an outside firm. Arizona, you do not. A lot of our clients tend to use the expedited service fee is $85 to get your LLC approved. It's $50 if you don't want it expedited, but you have to paper file and you can't do it online.
Yeah. It's much better to do everything through Arizona Corporation, their e-services, because then you have access all the time to update. If you change address, you change agents, maybe you add a member to your LLC. So having the e-corp is a really great way to keep tabs of your business. And you can also use the eCorp site to dissolve your business. If you decide, hey, I don't want to continue doing this business, I don't want the LLC up anymore, you can file the articles of dissolution. Again, very simple, very minimal fee incurred. In order to do that, the first step is getting a tax clearance letter from the Arizona Department of Revenue. You just need a letter from them saying you are free and clear of any taxes. It's a very quick and easy form. We have a link there if you guys need it. Once you fill in your information, you email it to Arizona Department of Revenue and they send it back to you. So it's super simple. And if you have the eCorp site set up for yourself, you can do everything online.
Before we move on, I do want to mention that a lot of our clients ask us, they've heard that it's better to set up your entity in Delaware or Nevada. For a tax standpoint, it does not help you at all. You'd actually have to create an LLC in Arizona anyway as a foreign entity doing business in the state. You'd have to hire a statutory agent in Delaware. And because you are an Arizona resident, you're going to pay Arizona taxes regardless of where you set up your LLC. So from a tax standpoint, that is not going to help you out.
Yeah. As being an Arizona resident, you live here. If your business is here, you're operating here, you have to pay Arizona taxes, which in the scope of it are relatively low compared to other states.
All right. So after you have your LLC, the approval takes about a week. Sometimes it comes in a day, but you never know with them. The next step is obtaining an EIN, this employer identification number from the IRS. This takes about 5 to 10 minutes online. You do this at the IRS website. Do not use a third-party site. If you get to the end of your application and it asks you to pay them, do not do it. It is absolutely free with the IRS. You do have a chance to review everything before you're done submitting. If you find a mistake, unfortunately, they have no back buttons. You have to start over from scratch. Luckily, it's not that long.
Yeah, so really great. So once you do the EIN application, you do it online. If you wanted to do a paper copy or a paper form, you could. It would be the SS4. Online, everything is quicker and faster, so we'd always recommend going that way. And you, after you do the EIN application process, you have a chance to review everything. If it looks good, you complete the application process. You get a nice little web browser that says, congratulations, here's your EIN, and it tells you what your EIN number is. There'll also be a chance to download a PDF with the IRS EIN confirmation letter. Make sure you download this and save it, print it out, keep it for your records, because trying to find this later down the road is going to be really, really difficult. So make sure you download that PDF after you complete the application process. Don't close out of the window. And then you can take that EIN confirmation letter, bring it to a bank, and set up any business bank account that you wanted to do bank with. Usually we recommend using your personal banking account. It makes it a lot easier to transfer money between business and personal.
Yep. When you're setting up your EIN, on the EIN letter that the IRS gives you, it will tell you that you've successfully set up your LLC, or if there are two of you, it will automatically make you a partnership. Unless you specify otherwise, you will be deemed a partnership and have to file the 1065, which is a separate return. Just keep that in mind. If you have more than two people, you might want to take the steps to ensure that it doesn't go there if that's not what you're wanting. because an LLC with a single member would be considered a disregarded entity. Those are reported on your personal return. They don't have a separate tax return. They go on Schedule C, which is the profit and loss from a business. We will discuss the S-Corp later on, but for right now, the EIN is super important. It's kind of like your social security number, only for your business. This way, if you do business for someone and they want to write you a 1099, you don't have to give out your personal information.
I'll talk more about 1099s. That's a super important topic everyone should know about. Many of you probably received 1099, so it's really good that we touch on that. I think in a couple of slides we'll get there. Here we are. So anytime a business pays out $600 or more, you are required, or they are required, to issue a 1099. 2020, they actually changed it. Now it's a 1099 NEC. NEC stands for non-employee compensation. So those are due by January 31st. So make sure you issue those. There's online sites where you can issue 1099s. You can get paper copies from the IRS for free. It's best practices. We always say, if you're starting a business, hiring anyone new on, make sure you get a W-9. So that's a request for taxpayer information. You need a W-9 before you can issue a 1099. Those two kind of go together. So the person you're paying, who's going to be receiving the money, is going to fill out the W-9. Make sure you get that on the front end of any engagement, because 12 months is a long time and engagement can go south, and you want to make sure that come tax time, you have all the forms and necessary information to file those 1099s. So super important. If you're in business, if you're going to hire a consultant, a contractor, someone to help out in the office, make sure you get a W-9 on file. Just keep in your records. It's always helpful to have.
Okay, so now that you have a LLC, you can get the business bank account set up. We do recommend using your personal bank. It makes it much easier to transfer money from your business to yourself. It also keeps everything all together in one spot. You don't have to log into several different banks. Also, keep in mind that you are not your business and your business is not you. So try and keep the bank account separate. Don't try and pay your mortgage with your business account. Or buy business supplies on your personal credit card. It just kind of makes a mess near the end of the year. So we say, keep it separated and simple.
Mm-hmm. If you need money to live off of, transfer money from your business to your personal account. If the business needs money, transfer it to personal to business. Don't make direct expenses out of your business account for personal needs. Always keep it simple and keep it separate. Okay, so we're going to learn a little bit more about taxes and your new business. So as we stated earlier, a business with one person is called as a single member LLC. Tax purposes, that's called a disregarded entity. It means it's nothing bad. It just means that you don't file a separate tax return for that business. It goes on your personal tax return on your 1040 on Schedule C, which is profit or loss from a business. Income reported on the Schedule C is considered self-employment income. So that means you're going to pay two taxes on that income: ordinary income tax and self-employment tax. We kind of talked about it earlier. Self-employment tax is Social Security and Medicare tax. It's essentially the same exact taxes that you have withheld from your paycheck. So just make sure that, make sure to know if you're going to pay in estimate taxes or understand taxes at all, that you're accounting for your ordinary income tax and self-employment tax. So here we talked about the self-employment tax, Social Security, and Medicare tax. So Social Security tax is 12.4, Medicare tax is 2.9, combined is 15.3. So you do get a deduction for 50% of that on your personal tax return as an adjustment to your income. So if you were a business owner, you get to deduct you get to deduct the payroll taxes for your employees that you're paying. And if you are self-employed, you are required to pay an estimated taxes to the IRS in the state. Those are due quarterly. So there's 4 times a year you have to make payments. Quarter 1 is April 15th, so it coincides with the tax deadline. Although this year, not sure if you guys have heard, the IRS recently changed the tax deadline to May 17th, so that's super important to know. But I don't think any changes have been made to the estimate. So Q1 is April 15th, quarter 2 is June 15th, third quarter is September 15th, and fourth quarter is January 15th, 2022 for this year. So just know, so you have until the end of the year, figure out your business net profit to make your fourth quarterly tax estimate. IRS has some really pretty standard rules for making your estimates called the safe harbor rule. So the safe harbor rule says you have to pay in The lesser of the two, either 100% of last year's tax or 90% of the current year's tax. So you have to do either estimate what your for this year, what your 2021 tax would be, or an easier way is to go off of your 2020 tax return, look what your taxes were on 2020, and then make sure you pay at least 100% of that. That's the safe harbor rule. With any rule, there's always an exception. If you have income over 150,000, IRS says no longer can you pay 100%, you have to go up. So instead of 100%, it's 110%. So a lot of people can fall into that, especially if you're married, you may easily be over that $150,000 mark. Make sure if you have a business and you need to pay an estimate, you're doing 110% of your 2020 taxes.
So if you don't pay in estimates, what's the consequence?
There is a consequence. So the IRS charges an underestimated penalty. It's pretty minimal. It could be 1% to 2%, but a lot of clients just want to avoid penalties altogether. Worst case scenario could be a couple $100s, so I wouldn't be super fearful of it. Just be understanding and know that, hey, if you don't pay in the proper safe harbor estimates, you could be charged or dinged a little bit of a penalty. And S Corp, LLC, or if someone has an LLC or PLLC, they always have the option. So right now you're a disregarded entity. You set up your LLC, you got your tax ID number. If you want to be an S Corp, I'm sure you may have heard of that along the way. S Corp stands for S Corporation or small corporation under 100 members. So you can elect to be an S Corporation, and it's an election that you actually have to make with the IRS. So Joanna's going to talk a little bit about setting up the S Corporation. Just one thing to know, if you are going to do an S Corporation, it's super important to know one of the biggest rules of having an S Corporation is that the owner has to be paid a reasonable salary. On the S Corp tax return, it's an 1120S. The top expense line item is compensation paid to officers. So if you're going to set up an S Corp, be mindful that you're going to also have to set up payroll for yourself. And then I'll let Joanna talk more about setting up your S Corp.
So for setting up an S Corp, you have to file Form 22553. You have 75 days of setting up your LLC to file this form. If you don't file it within that time because you don't know if you want to be an S Corp or not yet, that's fine. At the beginning of every year, you have 75 days to decide that you're going to do it for that year. There's also a way to do it if you are late. It's not a huge deal if you file late. You just have to explain on the application why you are late, and then assign it with the revenue proclamation that goes with your reasoning. You can also file an S Corp election along with your first tax return. That's possible. Well, you just have to write on the top of the 1040 or the 1120S tax form that it includes the late election filed pursuant to said proclamation. I don't know the exact numbers.
Yeah. There's 3 or 4 that the IRS goes off of, and the instructions for the 2553 list them out. So they're there for anyone to look up. And it takes about 60 days or 2 months for the IRS to send you an approval letter. So it's not automatic. The election is not 100% guaranteed. IRS has to approve it. It takes about 2 months to get that IRS approval letter. It'll come in the mail. If for some reason it doesn't come in the mail, or you moved, or you're not sure if you received it, there is a number to call, 1-800-829-4933. You'll have to have your EIN handy, and you can look and you can talk to an agent. It may take a while, so it may be easier just to wait and see. But if you need to know because you need to file your taxes, you can look it up or give a call to the IRS. That's kind of explains a lot of the LLC and the S Corp. Another really important topic that a lot of clients are asking us now, it's hugely topical right now, is the PPP. That is the Payroll Protection Program. I don't know if you guys have heard about that. That's really important for gig or self-employed workers or anyone who filed a Schedule C. So there's actually 1 more week left to file your PPP loan. So PPP is distributed by the SBA, Small Business Administration. You can apply online through your bank, or there's other online lenders. There's Lendio, Cross River Bank, Wobbly, Blue Vine. These are all different lenders that are providing the PPP. PPP is a loan, and it's deemed to be forgivable. You have to file for the loan. You have to file an application for forgiveness, and it would be tax-free. So it's a win-win. And it goes off of your gross revenue from your Schedule C or your sole proprietorship, line 7. So the maximum you can get is up to, so there's a unique formula. They take what your gross revenue was. So we can say it was 100,000. They divide it by 12 to find out what your your monthly annual rate was times 2.5, because they're essentially giving you 10 weeks of free income. So the percentage we figured out is 20.83%. So if you made 100,000, which is the max, you can't go higher than that, you would get a PPP, free money from the SBA for $20,833. So pretty cool there. And then let's say if you have a 25% drop in income from 2020 compared to 2019, you can actually get the second draw of the PPP. So there are some people, if you were at 100K or higher in 2019 and your income dropped 25% or significantly, you can get double the PPP. So it's 2 applications, but a lot of these lenders are doing it all in one. And it would be a forgivable tax-free loan from the government.
Now, don't just go thinking that you can just sign up a business and do this. You have to prove that you were in business before COVID hit. Mm-hmm. So before February of 2020.
Yeah, they're going to ask, a lot of times they'll ask for a copy of your February bank statement, a copy of your 2019 Schedule C, a copy of your 2020 Schedule C, voided check, bank statement that shows business income and expenses happening in February 2020, and driver's license. And it's going to be a real loan, an SBA loan with a loan number, loan terms that if you don't pay it back or you don't apply for forgiveness or get forgiveness, you're going to have to pay it back at about a 1% interest rate. But it is super helpful for a lot of our clients. This week alone, we were able to get one client $35,000, another one $20,000. So people who were economically hit by the COVID and the pandemic, were able to help them. And you guys can go online yourself and, contact your bank and get those PPP loans as well. So that kind of sums up our discussion and presentation for turning your side hustle into a business. I hope that was super helpful. We would love to open it up to any questions or comments that the Arizona Foundation for Women has or anyone watching has.
I don't see any questions that have come in yet, but from our clients, we get a lot of questions that are regarding what kind of expenses that they can take on their Schedule C. Can you describe some general business expenses and how meals works and entertainment works for your Schedule C?
Sure. So on your Schedule C, you can take anything business related, such as office supplies, accounting expenses, independent contractors, travel if you traveled for business, insurance, licenses, continuing education is a big one. For meals, you are only allowed to take 50%, and it has to be a meal for business, specifically for business. And it can't be, I'm out of town and I fed myself, because you would have had to eat anyway. So they do not allow that. So meals get cut by 50%. And as of 2018, they do not allow entertainment as an expense anymore. So buying the season tickets to the card.
apologize. We're currently having some technical issues where we're trying to figure out what's going on. So thank you for your patience.
Hi. I hope I didn't break it. Well, thank you guys for listening. Sorry for all the technical difficulties. Was there any questions I could help answer? Totally welcome to in the chat about PPP or business or expenses. Joanna had said entertainment not deductible, so no more taking, your clients out to a basketball game or Top Golf, maybe the meals, but not the entertainment portion. Any other questions, Megan, you get? I know your firm deals with a lot of major clients, so any questions you guys field over there?
I think those are the bigger ones with entertainment and meals. Just clients don't quite know exactly what to deduct. I think we always like to recommend having 2 separate accounts for it, because sometimes we see meals mixed in with entertainment and we have to break it out, and that just makes it more challenging. So I think just having records of everything separate is helpful.
Yeah.
But I don't see any other... Sorry.
Okay. No, no, you're fine. Yeah, so we have accounting services here. We have about 65 clients on monthly accounting. And yeah, when we do the bookkeeping for them, we definitely, in our QuickBooks and their ledger, we have an account for meals, an account for entertainment, and entertainment is non-deductible. So it used to be one kind of lump expense, but now they've separated the two. So. All right.
Yeah, I don't see any other questions in the box that is
okay. Well, this was fun. Well, this is our first time. We just joined PAC, so hopefully we did a good job. Thumbs up.
Great job, guys. Thanks for being here.
Thank you.